Is I have this scaling in negative delta broken wing butterfly. It's like a bearish butterfly, but it's not as aggressive as a bearish butterfly. In other words, when I look at my chart here, I'm pretty aware that this is going to go to here or to here, or why not all the way to here? Before we get rolling here, just a reminder to please like and share our videos. Your support helps us to continue to bring you the wonderful content that we share with you each and every week. Because realistically, once you've pushed this high, the market's going to go for all-time highs. Even though this is a price pattern target, and arguably I could have made a higher number too, right? I could have put my neutral point here, in which case I'd be a little bit higher. Even though this is a price pattern target, it's close enough to this where the market, the short-term play is going to drive that level and probably exceed it before the market backs off. Realistically, when I'm placing my bearish broken wing butterflies, and you've seen me do this with bearish butterflies by not scaling in, instead of scaling in every 20 points, I'm scaling in every 100 points. Negative delta, bias, broken wing butterflies, I'm scaling into these because realistically, what's going to happen once you get up into here is we're probably going to have a bit of an extended time here. Now we might break out and go higher, but if we go higher, this time frame is going to be enough for those butterflies to be break even, and I can reposition. Like I can scale back out, I can maybe go a little more bullish. It gives me options up here. That's how I'm kind of dealing with that time frame. And if the market went down, one of the things that you know that I do is, first of all, these are bearish positioned. As I scale in, I can cascade out of them just like I do with the bearish butterfly until I hit 1/3 position. And then I can do my lockdown procedure for M3.4U on the way down. You know, say this went down, it's basically coming down to here and it's going to bounce. So I do my lockdown position, which isn't bad. Like I can do a really safe lockdown position and almost be not drawn down when I have my maximum risk in the structural risk in the trade. And I can run down here. And then when it does that, that bounce is going to clear through that, and that trade's going to win. That's basically my plan, right? So manage my drawdowns on the way up, but start taking on upside risk to the point where I have a decent upside risk here, and I'm going to be short enough time frame. Whereas if I consolidate here, end up basically like we're all the way up here, and I'm not even down money. So that's fine. Now I'm just holding a little bit of upside risk, and then as this consolidates, that should gain money. And the time frame's getting shorter, so it's going to accumulate fast. And then again, if it breaks down, I clear out of positions on the way down, or maybe even just exit. That's how I'm basically handling that time frame. And I'm fine with a break even if this keeps going, or maybe a small loss, but that's not probable. And then on my other time frame, this time frame is basically business as usual. If I usually do an M3.4U and it's time to enter, I just enter. If I normally do a bearish butterfly and it's time to enter, I just enter. If I normally do a Super Bowl and it's time to enter, I just enter. It's just business as usual in this time frame for me. It's just like nothing happened.